Hello there, traders, and welcome back to this week commencing 17th of October 2022. I am Kenny Simon with you live on Breton's Week Ahead webinar. So thank you once again for joining me. Now, we've got a very, very busy week ahead, a highly volatile week as well. So I'll start to cut to the chase in order for us to actually have questions and answers as well about this very, very volatile week. So once again, welcome to today's Week Ahead review webinar. Now, this is the week commencing 17th of October 2022, right up to Friday, Friday the 22nd of October 2022. So let's start off with something that we call it in the industry earnings season. Now we've got, of course, 4 seasons in a year. We've got your summer, winter. We're into autumn at the moment, heading towards winter, but we also have got earnings seasons that are usually announced 4 times a year as well. They go by quarters of the year. So we've got earnings season is firmly underway with US banks and then a variety of other names reporting, including Tesla and IBM. So it's really important for us to know that these earnings seasons does actually move the market quite a lot, and they are actually an indicator or a leading indicator of the economy that are mentioned, especially in the States. Now, this will be focus for markets for a couple of weeks at least, now providing a welcome diversion from the focus on inflation. So we know that we've got this inflationary recession mode, and there's fear building up. Asian sessions are not doing too good as well. We've got news coming up, popping out as well, talking about the dumping of the US dollar. So we've got a lot going on. So we do not escape entirely, however, since UK Consumer Price Index CPI is released on Wednesday. So we've got some fundamentals in terms of economic data releases, especially with your CPIs as well as other very important data coming out of China as well, starting tomorrow onwards, Tuesday, the 18th of October. So there's a lot of volatility expected, a lot of liquidity as well, and I see that we would be having loads of trading opportunities. So with that comes risk as well, hence the reason I would love to guide you guys through, guys and girls, traders especially, to understand the risks that are involved and how do we actually spot high probability, low risk trades as well. So most stocks are categorized as bellwether stocks. Now, bellwether, not bellwater, but bellwether stocks. Now, bellwether stocks are important for you guys to know. This is one new thing that you guys can actually learn when it comes to stocks and when it comes to earnings seasons, especially because most of the earnings seasons reports would actually involve bellwether stocks. So what are bellwether stocks? Now, the term bellwether stock refers to a stock that is believed to be a leading indicator of the direction of the economy. Now, a specific sector or the market as a whole. Now, because they are considered market leaders, strong earnings reported by bellwether stocks indicate a strong economy. So hence the reason loads of investors are just waiting on these earnings. Now, these earnings reports are usually released before the trading sessions or after the trading session. So usually in the morning or late afternoon, in order for traders and investors to focus on their trading and their investment portfolios. So they do not want to actually interfere in the timings of trading times, especially. Okay, so their market performance of these bellwether stocks may also signal how a sector or the market will perform. Conversely, if the stock does poorly, for example, it often indicates the same for the economy. So bearishness, if it is, we've got bearish sentiments within the report, for example, and you've got some troubles ahead predicted as well for that particular company, that's public listed, then we have got bearish sentiments, and vice versa. If it is something positive, then it would actually bring about to positive sentiments amongst investors and traders. So as such, they are generally considered economic indicators, so leading economic indicators. Hence the reason I thought it's really important for us to understand a little bit. I know most of you would actually be trading FX, for example, or an FX platform, but it's also wise to understand that on specific platforms, the stocks are also available. So we've got your 100 top stocks, US stocks are available, like Google or Alphabet, AT&T, for example, and various other ones that are categorized as a bellwether stock. So bellwether stocks are typically large cap blue chip stocks. Okay, so I hope you guys get a bit of an idea of this, because we are in the earnings seasons. It's really important for us to understand about bellwether stocks. Just a little bit about it would actually help a lot, because this is what's going to be moving the markets quite a lot as well for this whole week. Now let's get into the currencies market now, before getting back into some stocks earnings that will be announced today. Okay, so I want you guys to also have an idea of the stock side of it, so that maybe you guys will be wondering why all these companies would actually be mentioned on top news today, and then you'll be wondering how could it actually help with our currencies market. Now let's start off with some happenings within the currencies market. Now we'll talk about British pound first. Now the British pound respite as US dollar weakness and a possible policy backflip. This was announced late on Saturday night, Friday night onwards, and there was already some hint, and today we can actually see that the UK British pound have actually just surged and rallied upwards. Now a lot of traders have actually been wondering what on earth have actually been going on with that. So hence the reason it is really important for us to be behind the news, behind all the top news as well, because these are fuel to the market. So British pound, GBP / USD, US dollar as well, USD / JPY, Chinese currencies and its economic situation, crude oil, gold. These are all main talking points for this entire week. Now let's talk about the British pound again. So the British pound gained as the US dollar took a breather. Now we have only ridden on the US dollar, and then we have seen that inflationary mode have actually encouraged US dollar to go up and up and up and up. But then now the table have actually turned in a way with some new policies that have actually been announced as of today market open as well, and hence the reason we are looking at the British pound surge. Now it's all over the what do you call that, the heat maps as well. So I want to get back to the heat map in a minute, but then before that I want to talk a little bit more as well about the markets in general before we go into the stocks. Now the markets appear ready to punish poor fiscal and monetary policy. So the question in the market at the moment, will the USD JPY and the GBP USD see big moves without a tilt in policy? So we're already seeing as of market open what have actually happened and what's been happening right now, because that question was posted late last night, and then coming out from Saturday night onwards, there's a lot of forums talking about it, and these questions were revolving the GBP crosses as well as the USD crosses. So right now, let's also take a look at the top 10 movers and other tools to get an idea of the trend. In order for us to cherry pick the pairs and instruments, we can do a trend analysis on the charts. I know a lot of you out there are wondering about gold, wondering about GBP crosses, Euro crosses, especially Euro USD, Euro JPY as well. We'll get to that definitely. But what we can actually then do right now is just to go very briefly onto the stock side of it, because most mainstream media as of late last week and over the weekend has been hinting investors to take any chance to sell the stocks, and this week as the busy earnings season continues, because there is a correlation between the stocks markets, equities markets, all the generic markets out there. They are all correlated, whether positively or negatively correlated with the currencies market. So what we will be expecting today is the earnings season's report from the Bank of America. Now, Q3 2022 earnings released at 6:45 a.m. That's Eastern time or Eastern time zone. Conference call would actually be in the morning as well. Now, what's projected in the earnings per share, for those who've actually trade shares and stocks as well, they would understand what EPS stands for. That's earnings per share. That's at 78 cents for Bank of America. Their projected revenue was actually 23.54 billion. Now, what we are expecting from what we hear in the markets is that we expect that the bank to report a greater or a great number, but that it might have to, but that would actually change everything because it depends on stock, depends on bonds, on oil, as well as on the dollar, because these are the markets that are focused at this moment of time. And if they go haywire, then all these numbers projected as well would actually go with it, you see. So we also want to monitor tomorrow's as well. I'll talk a little bit about all the companies that we are actually expecting, because the reason is these companies make up the 100 top stocks company as well. So then they are included in the indices as well. So the indices are a group of stocks, and these are all correlated with other markets. So tomorrow we'll be expecting Goldman Sachs, Johnson & Johnson, and also Netflix. A lot of traders are expecting Netflix. Now, on your trading platform, you are able to trade stocks as well. Now, they are on CFD, so hence the reason it is important for you guys to also understand, know a little bit, in case you want to try trading these stocks as well that are available on your trading platform. So this is by Goldman Sachs, for example. They have actually, it'll be released almost the same time, but about 1 hour later at 9:30 a.m. So the projected earnings per share was $7.75. The projected revenue is looked at 11.42 billion. So experts are calling the stock crazily cheap at this moment of time. This is what's going on at this moment of time. And most are eyeing for a solid bottom line from the company in its latest quarter. Okay, so there's a lot of news going to come out. Usually people are going to be investing after the reports comes out. Then we talk a little bit about Johnson & Johnson. It's got its projected EPS, earnings per share, $2.48. So when it comes to stocks, even though you're trading you're trading on the CFDs and you're not owning physical stocks, it's important for you to understand that usually in evaluation of stocks, the term EPS or earnings per share, you can always type that on Google and learn a little bit about it. And that is basically used to evaluate the stocks. Okay, so for those who are just wanting to learn a little bit about stocks as well, it's important to understand the term EPS, earnings per share. So the earnings per share for Johnson & Johnson was at $2.48. Its projected revenue is 23.36 billion. Now, the stock remains one of the investors' favorite at this moment for Johnson & Johnson. And then we'll talk a little bit about Netflix as well. Projected revenue, 7.84 billion. So as I have actually followed up on Netflix earlier on, because we have had too many news on Netflix, and there's a lot of discussions on Twitter as well. The projected revenue is 7.84 billion. I think I've made a little bit of an error there with the revenue projected amount, but that 7.84 billion stands in US dollars. So we are expecting to hear more about Netflix, new advertising supported tier, and most investors seems to have the faith that the company will roll it out without going overboard with the number of commercials. So that's on the Netflix side of it. Now, on Wednesday, we have got Procter & Gamble, Tesla, IBM, and also Lam's Research. Okay, so this one here, if we're talking about Procter & Gamble, there's a projected EPS, earnings per share, at $1.55. You can actually make that difference with all the other ones that we have actually talked about. We can see that Netflix is almost double of that EPS, and we can see that the other ones are actually quite high if you compare that to Procter & Gamble. But the projected revenue, though, is 20.35 billion. Okay, so the company's stock or Johnson & Johnson stock will go up even if the quarter is bad, because so many short sellers are betting against it. So that is what Kramer from CNBC have actually predicted as well. Okay. All right. So we'll talk a little bit about Tesla, Elon Musk as well. So we've got loads of tweeting going on as well, but the projected revenue is at 22.14 billion from a projected EPS of $1, just above $1. So that is basically the EPS there. Now, what Kramer have also mentioned that the buyers will likely support the company's stock no matter what the quarter looks like. So this could also be followed up for those of you who are following up on Twitter. You can actually see all the discussions going on as well on there. Okay, now with IBM, we've got a projected EPS of $1.79. Projected revenue is a little bit on the low side as what we can actually see, 13.53 billion. And it is unclear basically for the company whether or not the company will be able to post results that will excite the market, as what CNBC posted through Kramer as well. Now, Lam Research on the other end projected EPS $9.58 with its projected revenue at $4.93 billion US. Now, there's a lot going on with this company basically. Then it's got to do with semiconductors basically, and the semiconductors world has to be researched a little bit more because we have got something got to do with its applied materials, AMAT and stuff like that, which is more on the technical side of it. So compared to the other stocks, I think this one here would require more technicality research on the matter of its stocks prices. Okay, Thursday, we've got AT&T, we've got projected very low, 61 cents, projected revenue, 29.84 billion. Experts are basically hoping that AT&T won't have a disappointing quarter. Most of the trades investors are quite skeptical of the company, whether or not they will be able to basically cut it out or cut it off. So that is basically it on the side of AT&T. And with that, I would like to then go on to questions from you guys of the market in general. And before we actually, I think I missed out on Friday. Friday, we've got Verizon. Verizon, I think that's the only one. It's projected at 33.78 billion as well. I've just missed that one there. But that is the overall on what we are talking about on the earnings seasons. Earnings seasons is about reporting on all these shares that can actually then be a leading economic indicator. All right, so now let's get onto the charts, get onto my screen that I'm actually sharing at this moment of time. And the screen will actually show you the heat map on the, 10 Dot Academy dashboard. So as I've mentioned, a lot of traders have actually been asking me about what's been going on at this moment of time. Are we sharing the screen at the moment, Andreas? Okay, brilliant. So we've got the Forex heat map, as you guys can see. Now, I've talked a little bit about GBP, JPY, because as you guys know, how do we actually take a look at this heat map on 10 Dot Academy? Now, the Forex heat map on most of the platform and dashboards, we always start off with the currencies on the left. Now, a lot of traders have been actually asking me, what about Euro USD? What about gold? What about the other currencies and things like that? They probably have actually traded and got stuck into. So what we need to actually understand is that we try to prevention is better than cure. Preventing yourself from getting trapped into a trade is very, very important. And how do you do that is by picking the right pair to trade for the day. Now, we use tools like the heat map, the top 10 movers as well. So in that way, we would actually be riding along trend that has actually been created by the big boys, by events, risk events, and everything out there. So we don't usually pick out, I mean, from my experience itself, we don't pick just any pair that we like or love to trade, mainly because if the liquidity and the trend does not support that pair, then that pair will actually cause you as a trader to be stuck into trades. okay, because there's just no trend and liquidity pushing or momentum and volatility pushing that trade, pushing that prices of that particular instrument. So we wouldn't be knowing where would the direction be. But if we pick the right pair, we are able to then understand the direction, and it's backed up by the fuel on the fundamental side of it, as well as the technicals would actually show as a window of the market the direction that you can actually go, where the reversals are and various other things. Okay, especially trend analysis would give you an indication of how strong, clear, and smooth the trend is for that particular pair. Now, what I can actually see from both heat maps, the one in the Action Forex as well as the one that is in the 10 Dot Academy, is that they are actually pointing to the same sort of information, where GBP is actually picking up its bullishness at this moment of time. As you can see, we have got this straight row. You start off from the left, GBP. So GBP across horizontally, you could see that it's got the most blinking green ones. And if we go ahead and look at a screenshot right here of the top 10 movers as well. But before the top 10 movers, a heat map right here on Action Forex does the same thing. Now, we could see that GBP on the GBP, we could see that GBP versus the JPY is the clearest. We've got GBP showing a lot of blues, right? A lot of blue colored bars all over, all across. We don't see red bars. We don't see any other color. So we are looking at only blues. Now, that is great news, because we are looking at the momentum picking up in terms of an uptrend or bullishness picking up from what has been fueled in fundamentals. So in the fundamental side of it, what has actually happened is this one here, which actually happened just a couple of minutes ago. I would say less than 20 minutes ago. We have got the UK stock market, of course, have actually risen from the idea of UK borrowing cost have actually fallen. And that was why pound rallied. Okay, so that's just why we need to actually monitor the news as well. Now, this is the fuel that is going to push up pound more to the upside, not to the downside. Why? Because this is the fuel that have instigated an uptrend for now. Now, how long would it actually last? We would need to go on to the charts as well as the window of the market to actually give us information on multiple time frames, whether or not the trend analysis would actually support whatever that has been going on at this moment of time. So this was released, and then we have got an hour ago, for example, UK government borrowing costs. So that was from an hour ago. 2 hours ago, we had UK to be in recession until summer 2023. That was a negative type news. But then look at how the whole table have actually turned just because of this latest news on UK borrowing costs that have actually fallen. Now, that is now giving us a rise in the GBP and GBP crosses. And the one that is to pick out from all the GBP crosses is actually the GBP JPY, to do a trend analysis on, not a technical analysis as yet, but to do a trend analysis to confirm how strong the trend is, how clear the trend is going to be on multiple time frame. Okay, so what I would like to do is not to waste any more time, but to straight away pick out one pair right now, which is GBP JPY, which is probably the best pair to pick for now, following what's going on in the market on the fundamental side of it. And then we want to confirm it in a trend analysis right now. Okay, so let's pick out GBP JPY. Why we are not picking out GBP USD or GBP other crosses? The reason is because we've got this very clear trend being very bullish or strongly bullish between GBP and JPY. So GBP is strongly bullish. As you can see, it's the only row, only blue, dark blue row, and it's on the 4-hour daily, weekly, and monthly as well, according to this tool. So what we need to do is we do our own trend analysis to confirm what we can actually see on this tool, this heat map tool right here. Now, before we do that, going on to the chart, it's also good for us to take a sneak peek onto the top movers on Action Forex as well. Now, this one here, we will amalgamate this information with all the information, majority of the tools are all available on your 10 Academy. Now, we need to look at these top 10 movers as well to get that whole idea whether or not GBP crosses are moving to the upside, whether or not the interest by traders and investors are also buying the GBP as opposed to the other pairs, the other currencies. So here, for example, as we can see, we have got all these commodity. Now, there's a reason why the commodity currency, especially the antipodian currency pairs, are leading the way. We can see that AUD USD is at the top, second to that NZD. These are antipodian currencies, both Australian dollar and New Zealand dollar. The reason for that is because tomorrow we have got a very, very long list of Chinese economic data. Now, remember, we've also mentioned this, whenever we have got any news, especially categorized as high impact, high volatility type news from China, it will then connect the dots to Australian dollar and New Zealand dollar as well. Okay, this is all the trade balance type figures that we can actually connect the dots with. So it is really important for us to look at that, and I can see that they will still top up the news as well tomorrow, even on the top 10 movers on Australian dollar and New Zealand dollar as well, only because these countries, Australia and New Zealand, are heavily reliant on anything that goes on in China, especially its economic situation, its trade balance, its balance sheet, on everything. And that is basically what would actually be going on, or as expected tomorrow. Now, if we have got a trigger or a movement of more volatility and momentum onto Australian crosses, Australian dollar crosses and New Zealand dollar crosses, what will then happen is to instigate a little bit of a movement on other commodity currencies. So we've got commodity currencies like Canadian dollar, for example. We've got the ZAR as well, of course, Australian dollar, New Zealand dollar. So these are all commodity currencies. Now, when the commodity currencies start moving a lot more as well, this will then trigger commodities and precious metals as well, like the gold, the silver, and other commodities, including the other precious metal like copper, palladium, platinum, and various other things. But gold and silver especially, mainly because these are safe havens. Now, with the safe havens, when we have the trigger and the interest onto gold, especially when gold goes up, then you would actually see then we have loads of other interest onto safe haven currencies like the JPY and the CHF or the Swiss franc. So that's basically the rough idea on how you connect the dots in order for you to be able to pick the right pair and then to analyze it further of its trend. Okay, so we have got GBP crosses as well, of course. We've got AUD and NZD, as I've mentioned. We've got USD here until the third place right here, but we've got quite a number of JPY crosses picking up. Now, when we look at GBP crosses, we could see that there's a star, there's a, not a star, but a plus sign right here under the change in percentages. Now, what that means is that it has encouraged traders to actually go onto a buying spree of GBP crosses. We've got plus sign here on GBP JPY as well, and we have got a negative sign right here, negative symbol on Euro GBP, which basically means they're selling the euro but they're buying the GBP. So the buying has already taken place since, you know, a couple of hours back, and then we've got a bit of a delayed response at the moment with the news that's been released an hour or 2 hours ago on what's been going on in the UK. So we do have that kind of lagging response from the traders as well, mainly because majority of traders and investors are not in front of the computer looking at news all the time. So hence the reason it's important for us to also be aware of the news through attending live webinars like these ones, and also you know, responding to messages, notifications on social media groups that I run as well. And that's the way that we can actually maintain the step 3, which stands for insights in the price trade plan. So you got PRICE. The I is your third step, where you guys come to me and the group of instructors to get the guidance and insiders information of what's been going on, especially breaking news. Okay, so there you go. We've got a bit of a rough idea now. Now we can actually proceed on to GBP JPY, onto the chart. And we'll take a look at GBP USD as well, but it's probably best for us to look at GBP JPY. I'll just get rid of all these indicators right here. Okay. Now, most of the indicators that I use are only to confirm the trend. So I'm really particular about understanding and deciding on the trend of that particular pair that I've chosen. So let's take a look at GBP JPY, and right now we're conducting a trend analysis. Okay, we've picked the right pair right now because of what's been going on in the market, what's been fueling the market. It was actually for GBP, and GBP was driven and fueled to the upside. And then we look at the heat map, and it's just hinting us that GBP JPY is probably the best pair for us to choose, not to trade, but to conduct a trend analysis on. So this is what we're doing right now, is to conduct a trend analysis. So let's take a look at GBP JPY, and we'll start off with, we could always start off as we do always on a 30-minute chart as well. We'll zoom out a little bit. Make sure when you do a trend analysis, you have your 3 lines, your 50, 100, and 200 exponential moving averages. Okay, that's all you need. You just need to change parameters, 50, 100, and 200. And then you look at 30-minute chart, you compare that, and you want to look at whether or not, now it's been hinted to us it's an uptrend. So we want to make sure that the 3 lines are moving upwards towards the sky. They shouldn't be touching each other as well. And the majority of candles, current candles, and the current price has to be above all the 3 lines. They cannot be inside the 3 lines. The 3 lines cannot be going sideways. They have to be on the upside, because we are expecting it to be upside because of the fuel on the fundamental side of it, right? So we have got it clearly uptrend. It is actually, making a bit of a reversal at the moment on the 30-minute chart, but that reversal is by the current candle having a long wick to the downside, which basically means it's weakening to the downside. Hence the reason, the longer the wick is to the downside, the weaker it is for the price to go to the downside or towards the downside. So there you go, uptrend on the 30-minute chart. Let's now compare that to the 1-hour chart. Now with the 1-hour chart, we notice that the 3 lines maintain its way pointing towards the sky, which is a very good thing. It's also separated from one another. We've got majority of the candles, as you can see right here, they are further away from the 3 lines, and they're going upwards as well, like the 3 lines are actually heading towards the sky. That's a good sign. So you've got uptrend, clear and smooth and strong. Not strong just yet, because we use the ADX to actually confirm its strength. So what we do is we can also at the same time insert the ADX, which stands for the average directional movement index. So we need to add level 25 on it, and we click OK. Right, and we want to only focus on the blue line, whether or not it's above the level 25. Okay, so if we go back to the 30-minute chart, as we can see from the 3 lines perspective, really clear, nice, beautiful. It's upward trending. We've got the blue line on the ADX slightly, it's not under the 25, it's actually made a bit of a curve and then right on the dot of the 25 level. So we compare that to the 1 hour. 1 hour is showing strength. So the GBP is strongly trending, mainly because the ADX blue line is above the level 25. Okay, so we've got clear uptrend, strong uptrend as well on both 30 minutes and also 1 hour, but stronger in terms of trend in the 1 hour chart. Let's now compare it with the 4 hour chart. Now, with the 4 hour chart, we don't really see it very clear at the moment in terms of the trend, mainly because of the 3 lines. The 3 lines are not as nice as how it has actually moved in the 30 minutes and the 1 hour chart. We need it to be really clear, separated from each other, and then going upwards. It's still slightly slanted to the upside, but at this moment of time, maybe a bit too early. This is on the 4 hour chart. But at the moment, the strength of the uptrend is still there, mainly because you've got the blue line of the ADX above the level 25. So I guess it's building up in momentum on the upside. Now, on the daily chart, anywhere between 4 hours to 24 hours time, we are looking at the trend has not really ripened, has not solidified as yet, the uptrend. There may be potential up there, but we've got the current price on the 4-hour chart, on the daily chart, sorry, it's actually really close to a reversal zone. So I guess we need to monitor the price as well. And I believe that the price is now trending or trading at 167.2830, has already gone above the 20 psychological level. So I would guess that if at all it would like to reverse and there's a chance for reversal, it can actually happen anywhere between 167.20 to 167.50. These are the two psychological levels as well. So I think on a shorter period of time to medium, we can see a little bit of action of us buying the GBP JPY, but we need to wait a little bit. For those of you who are more conservative, you can actually wait a little bit until the 4-hour and daily charts are also showing stronger trend. And with that, then you will get a little bit better in terms of trading at the right time, because at this moment of time on the daily chart we have got it only the candles are above the 3 lines, but 3 lines are still sideways at this moment on the daily chart. And also the strength hasn't really picked up. Why? Because the blue line on the ADX hasn't really gone above the level 25. So you can actually pick the right pair at this moment of time, but not the right timing to actually enter. So we are monitoring it for more fuel coming from the fundamentals, driving GBP up, and then more confirmation on 4-hour and daily and longer time frame to show us that the 3 lines are also starting to move upwards, and then it has gone beyond certain price psychological numbers as well. That will then trigger us of the right timing to actually enter the market with. Okay, so now this is for GBP JPY. Right now I'll still focus on GBP JPY, mainly because I've also spotted a very nice potential geometric ABCD pattern. Now I'll just draw that out for you. And this is your A to B line right there. So if we have more fuel in the market to actually push fundamentally, especially the GBP JPY to the upside, then we could actually see that the GBP would actually be able to proceed and go up quite a lot. But before that, I'll just confirm on this right here on the Fibonacci. Okay, it's looking not too bad at all. There is definitely a potential of it reaching this level here, but of course, you know, we need more news of more fuel, more news on fundamentally, including economically, politically as well, for the GBP to actually go up much more. So if it does, then it would push GBP prices to the upside, possibly to the 176 area. Now that's a very, very big move. It wouldn't happen just in one day. For example, that's 900 over pips to the upside. So will the British government plan things to actually just, you know, push up the pound to that level? Now that level would only be maybe in the long term, medium term, we don't know that yet, but there are chances of price movement to the upside. So it's probably best for us to take our trades in stages, like a 20 to 30 pips per time, and then we exit, we re-enter again. So then we know that the map has actually been drawn to project it to that level as a target, but not necessarily will it actually reach that target specifically. May actually, come down sooner than expected, or wouldn't actually reach to that extent. So with that, hence the reason we need to trade in stages and be careful with whatever that we're looking at. Now, if we go on to the weekly chart, I don't actually see a reference point for an upward type movement for pound to go up that high. Now, if we look at 4-hour chart as well, let's just look at here. We can see that we do have some reference point in the past. Let's say this one here. But the problem is that we on the current price, we have not seen or spotted a bullish mother candle in terms of its body in the past. But we do have one that is a little bit longer, but that's higher up at the opening price of, opening price of 167.60. So that's probably a better price to buy, looking at that as a referral point. So what I'm trying to say is that right now we are at 167.42, which is too close to the 167.50 psychological level. Anything can actually happen, or maybe a mini reversal or anything like that. So the better price to actually buy GBP JPY, which you could easily do a pending order for, so you don't actually need to monitor the price, and you can apply your stop loss on it, your entry price and TP and everything else, is by entering GBP JPY on a pending order, but at 167.60 or 167.65. So you could actually choose whichever price, but most importantly is to trade a buy on GBP JPY above 167.50, because we are on a very sensitive reversal area as well, because you see very, very close to this area right here. That wick itself is at 167.81. It has weakened from that psychological number of 80 as well, but I see that we need to focus on buying power that could be referred by this bullish candle right here. Now, this bullish candle here is on the 4-hour chart. It happened in June this year, okay, first week of June this year. Now, that is not too bad, a mother candle right there. It's got some power. It's about 70 plus pips, almost 78, almost 80 pips right there. So what that tells me is that yes, you can actually participate in a buy for GBP JPY, but not just now. Now it's too close to the 50 psychological level. So 167.60 would probably be a better buying price. Maybe you leave it at 167.63 or 65 would actually be a little bit better. So then, or for those who wants to be very conservative and be a bit careful, you can always, let me just color that in green, okay, for entry suggestions. So let's see, 167.59, that is their opening price. Make that 60, and then you've got another here. We've got a bit of a reversal potential, opening price of a bearish mother candle here at 167.73. So that is close to the 167.80 psychological level. So you've got two choices, okay, of entering GBP JPY, two price entry points. So one is at 167.60, 167.60 or 167.65. Okay, so that's your first entry point if you want to make that as your buy entry point for GBP JPY. The second one is only after it goes above 167.80 psychological level, which basically would be ideal, or for those who are more conservative, you want to wait. It's probably better to only enter at 167.90. Okay, so just so that it goes above that 167.80 psychological level. Now, in order to exit, you also have two choices. Now, I'll color that differently. For the exit, I'll put that as a red line, giving you the idea that it could be resistant. One is here at 168, 168.12, so 168.10 would probably be better before it reaches 168.20. So that's your first TP, right? Now, the second TP would actually be here. Let's say that's a 168. I think 168.10 would actually apply for both because there's just no room there. So you've only got one TP that I would suggest is 168.10. Okay, so 16810 is your exit, your TP. Your entry 167.60 or 167.90, right? You don't have much room there, but you've got a little bit there potential for the upside right there. But what you can actually do from now is simply click onto new order, and then on the type of order, you just click onto the pending order instead. So you don't need to actually get stressed of whether or not you'll catch the trade and stuff like that. So if it is a potential, let's say potential you've got a potential about 50 pips or so, right? So the minimum is about 50 pips, 45, 50 pips. So that's quite reasonable pips to actually take. So you can always just plan that on a pending order. You put in your stop loss, your entry, and your take profit in there, right? So your take profit is at 168.10, okay, 168.10. Your entry, let's say 167.65, let's say, okay, you've got slightly about 50 pips or so to make there, but also be very wary and aware that you are trading GBP JPY. Its nickname is the Twisted Sisters, which basically communicates the very craziness of its volatility and its movement. So when it comes to the stop loss, you need to decide that for your own, but I'll give you a little bit of a guidance whereby if, for example, your profit potential is 50 pips minimum, then you need the stop loss to be at least 60, 70 pips above the 50 pips, right? Mainly because of the GBP JPY. It could actually be very volatile. It could also be reacting. The market would actually be reacting like you have just seen on speeches or on announcements by, especially in the pound side of it, you know, or even in the yen or Japan side of it. So we need to be very, very careful at this moment of time. So if you are wanting to trade the GBP JPY, especially, make sure you have got risk appetite that is a little bit higher in terms of your stop loss. Okay, you don't want to be aiming at 50 pips, but then you want only 20 to 30 pips as your stop loss. That will almost automatically destroy your trade and basically put you into the losing side of it almost instantly. Okay, because you need room for a very volatile pair like the GBP JPY to actually move first before it actually, because you might not know, it just, you know, would like to reverse first or, you know, take its time, but then it's got loads of movement. We're looking at the 4-hour chart at the moment anyway. So it's a little bit too early to plan the trade, in my opinion, but we have got, because of the movements of the market, we have got this GBP JPY that could potentially be a trade idea and a trade plan. Now, what I would do is to also trade on it on the live account, and we'll be showing you the results of it as well. So I'll be on this trade as well on GBP JPY, just taking a little bit of a risk as well. But I see that there may be good potential for me to consider a buy. So I'll just, for now, I will just put a buy and then adjust the, insert the stop losses and everything else a bit later. There you go. So that is a buy on GBP JPY as well. But for those of you who would like to, you know, take it a little bit easier, not take that much risk so soon, is to have it as a pending order instead of a market execution order. Okay. Any questions, guys and girls? Any questions for now before we end the session for today? Because it's a little bit too early to analyze too many pairs at this moment of time. I would like a more solid trend, basically, especially for GBP crosses. So the moment we get more blues, columns of blues in the heat map, or green all across on the 10 Academies heat map, and we can be able to be sure that we have more solid trending pairs to actually do a trend analysis and then to trade them, like how we did it for GBP JPY. All right, guys, questions at all on YouTube as well? Do we have questions? No questions. Okay. If we have no questions, I would like to wish you all a happy pipping week, and all the very best until we see each other again. And do ask questions on the social media groups at any moment of time, and then we'll see each other again on Wednesday's midweek review. Take care to all. Thank you very much. Trade wisely, and be careful of this very, very volatile week. And thank you very much. Bye-bye.